I want you to picture this moment carefully. A sitting U.S. president, frustrated with interest rates, turns his fire not just on a policy decision, but on the institution meant to be above politics. A criminal investigation into the chair of the Federal Reserve doesn't begin with proof of corruption. It begins with pressure, with irritation, with impatience. This is not just Donald Trump versus Jerome Powell. This is something more dangerous, a test of whether America's economic guardrails still hold when power pushes hard enough. For years, Republicans have moved in near-perfect alignment with Trump. But now, quietly, something is cracking. A few are no longer whispering concern. They are preparing to act, even if it means blocking the president himself. And when the independence of the Federal Reserve is questioned, the consequences don't stay in Washington. They reach your mortgage, your job, your savings. If you want to understand why this fight matters far beyond politics, stay with me. Because to grasp what's happening now, we need to define the real problem underneath it all. At the center of this story is a simple question that sounds technical, but isn't. Who really controls America's economic direction? On paper, the answer is clear. The Federal Reserve sets interest rates based on data, not politics. The Justice Department enforces the law, not presidential preferences. Congress provides oversight, not obedience. Each part has a role. Each part has limits. But in practice, power is rarely that clean. President Trump wants faster, deeper rate cuts. Jerome Powell is moving cautiously. That tension has existed before. What's new is the method. A criminal probe, launched not over policy failure, but over testimony about a building renovation, lands directly on the Fed chair's desk. Many Republicans say they're concerned. A few go further. They warn that this crosses a line from disagreement into coercion. This is no longer about whether Powell is right or wrong on rates. It's about whether legal pressure can be used to bend an independent institution to political will. And once that door opens, it doesn't close easily. To see why this moment is so fragile, we have to step back and look at how the Fed's independence was built in the first place. To understand why this moment feels so explosive, you have to understand what the Federal Reserve was designed to protect the country from, including its own leaders. The Fed's independence was not an accident. It was a response to history. Again and again, political control over money led to short-term gain and long-term damage. Leaders pushed for easy money before elections. Inflation followed. Markets lost trust. Ordinary people paid the price. So the system evolved. The Fed was insulated. Chairs were given fixed terms. Decisions were separated from the White House. The goal was simple: remove temptation from power. That independence became one of the quiet pillars of American economic stability. Investors trusted it. Markets priced it in. Global confidence flowed from it. But independence only works if everyone agrees to respect it. When a president publicly pressures the Fed, that's noise. When the executive branch deploys legal force against the Fed's chair, that's different. That's pressure with teeth. And once institutions learn that compliance is safer than resistance, independence becomes a memory, not a reality. That brings us to the first real rupture, the moment when concern turned into confrontation. The rupture came quietly, then all at once. A criminal investigation, subpoenas, headlines that no Fed chair in modern history has ever faced. Officially, it's about whether Jerome Powell misled Congress over the cost of renovating the Federal Reserve's buildings. A project approved years ago. A project involving design changes pushed by Trump appointees themselves. But inside Washington, very few lawmakers believe that's the real story. This is where the crisis sharpens. Because Republican Senator Thom Tillis doesn't just raise an eyebrow. He draws a line. He says the credibility of the Justice Department is now in question. And then he does something rare in Trump's party. He commits to action. No new Fed nominees. Not until this investigation is resolved. In a Senate committee split 13-11, that threat matters. One defection is enough to freeze the process. To stall the president's ability to reshape the central bank, Senator Lisa Murkowski backs him, calling the probe an attempt at coercion. The message is unmistakable. Touch the Fed's independence, and the system will push back. If you think this is just inside baseball politics, pay attention. Moments like this decide whether norms survive or collapse. Because behind this confrontation lies a deeper question: how power really works when no one is supposed to be in charge. What's happening here isn't chaos. It's a system revealing its hidden wiring. On the surface, America's institutions look separate. The Fed sets rates. The Justice Department investigates crimes. The president leads the executive branch. But beneath that separation is a delicate balance of restraint, an unspoken agreement not to weaponize power across boundaries. That's the mechanism now under stress. The investigation into Powell sends a signal, whether intended or not. It tells future central bankers that resisting political pressure may carry personal risk, not impeachment, not policy disagreement, legal exposure. That changes behavior. Even if no charges are ever filed, the damage can already be done. Because independence isn't enforced by law alone. It's enforced by expectation, by precedent, by the belief that certain lines won't be crossed. Some Republicans sense this. Others hesitate. Many acknowledge discomfort but choose not to act. They defer. They wait. They say it's not their branch. And that, too, is part of the mechanism. Power rarely advances through loud consensus. It advances through quiet inaction. If this dynamic continues, the consequences won't arrive as a single collapse. They'll arrive as a slow recalibration of what's considered normal. And that brings us to the next escalation, when uncertainty itself becomes a second crisis. The second crisis doesn't explode. It tightens. Markets don't like uncertainty. They price risk faster than politicians react to it. And a public standoff between the White House, the Justice Department, and the Federal Reserve injects exactly the kind of uncertainty markets fear most. Here's the irony. An investigation meant, intentionally or not, to push interest rates down can do the opposite. When investors see political interference creeping into monetary policy, they demand a premium for risk. Borrowing costs rise. Volatility follows. Even Republican senators sense this contradiction. One warns that a public fight between the executive branch and the Fed is a perfect recipe for higher rates, not lower ones. Another urges everyone to step back, not because the system is calm, but because it's fragile. This is the quiet crisis. No single vote, no dramatic firing, just a growing question mark over whether the Fed can still act without fear. And when uncertainty becomes the dominant signal, institutions begin to self-censor. Decisions slow. Caution replaces clarity. The longer this drags on, the more the damage compounds. Because when the Fed hesitates, the effects don't stay abstract. They land somewhere very real in your life. Now let's bring this out of Washington and into your world. Because when institutions wobble, you feel it before economists explain it. You feel it when your mortgage rate stays high longer than expected, when credit card balances get heavier, when businesses hesitate to hire because the cost of borrowing won't settle. If the Federal Reserve starts making decisions while looking over its shoulder, caution becomes policy. And caution has a cost. It slows relief. It delays stability. You're not voting on subpoenas. You're not sitting in Senate hearings. But you're paying the price when uncertainty creeps into the system that controls money itself. This is why independence matters. Not as an abstract principle, but as a shield between politics and your paycheck. If this pressure succeeds, it sets a precedent. Future presidents learn they can lean on the Fed when they don't like the numbers. And that means your economic future becomes more political, more volatile, more fragile. If this analysis helps you see the system more clearly, share it. These dynamics only stay hidden when people stop paying attention. Because what happens next won't just affect policymakers. It will shape the economic ground you're standing on. And that impact doesn't stop at America's borders. What happens inside the Federal Reserve never stays inside the United States. The Fed is not just America's central bank. It is the anchor of the global financial system. When its independence is questioned, the shockwaves travel instantly through currencies, bonds, and emerging markets that depend on its credibility. Foreign investors don't parse Senate statements. They watch signals. And a Justice Department investigation into a sitting Fed chair sends a dangerous one. that monetary policy may no longer be insulated from politics. That raises global risk premiums. Capital becomes cautious. Developing economies feel pressure first as money flows back to safety. Exchange rates wobble. Debt becomes harder to service. All of this can happen without a single law being changed. America's power has always rested less on force than on trust. Trust that its institutions are predictable, rules-based, and boring. When that boredom disappears, uncertainty fills the gap. Allies begin to hedge. Rivals take notes. And global markets start asking a question they rarely had to ask before. Can the United States still separate power from policy? The answer won't be delivered in a speech. It will be inferred from what comes next. Because the future now branches not into certainty, but into scenarios. There are 3 paths forward, and none of them are abstract. The first is restraint. The investigation fades. Powell finishes his term. Republicans who drew a line hold it. The message is quiet, but firm. Institutions still matter. Markets stabilize, not because everything is perfect, but because the rules are still recognizable. The second path is erosion. No charges, no resolution, just lingering pressure. Future Fed chairs learn the lesson without it ever being written down. Independence survives on paper, but caution creeps into every decision. Stability remains thinner, weaker, more conditional. The third path is rupture. The probe escalates. The chair is pushed out or cornered. The precedent is set. Monetary policy becomes another lever of political power. Trust drains quickly. Inflation expectations rise. Volatility becomes structural, not cyclical. History tells us systems rarely collapse overnight. They decay through incentives, through signals, through what leaders are allowed to get away with once and then again. This moment will be studied not for what was decided, but for what was tolerated. And that brings us to the final question, what this means for you, and what kind of system you're willing to defend. This story isn't really about Jerome Powell, and it isn't even about Donald Trump. It's about whether a system designed to restrain power can still do its job when pressure comes from the very top. The Federal Reserve's independence has never been glamorous. It's been effective precisely because it stayed out of the spotlight. But once that independence is tested, everyone starts to see how much depends on it, from markets to jobs to the value of your savings. A few Republicans have shown that lines still exist. Others have chosen to wait. History will remember which choice shaped the future. The truth is, no institution survives on laws alone. It survives on collective defense, on people recognizing that some guardrails matter even when they're inconvenient. If you want to understand where this system goes next, pay attention to what happens when the pressure doesn't fade. And if you found this analysis clarifying, share it. These are the moments that decide whether norms endure or quietly disappear. I'll be watching what comes next. You should too.